Welcome to the Market Recap, your weekly digest of the biggest market stories from the past week. Join host Serin and financial expert Bruce Campbell as they go beyond the headlines to deliver cutting-edge insights into news that move the market. Proudly presented by the Canadian Securities Exchange.
Hi, my name's Serin, and I'm Director of Listings Development with the Canadian Securities Exchange. You're joining us for yet another market recap on Friday, February 24th. I am joined today live in person in the Vancouver office with none other than my wonderful co-host, Bruce Campbell with StoneCastle Investment Management. Thank you for joining me, Bruce.
Yeah, it's awesome live in person.
We're in person.
Yeah.
I love this.
Yeah.
We're going to have to extend the show for hours so that we can just sit here and really get into it.
Yeah, get fully into everything. Yeah, of course.
So as I mentioned, this is a brand new Vancouver office. We are at 1095 West Pender Street, Suite 305. Please come and see us if you are in town. Bruce, of course, is normally based out of Kelowna, but he came into town last night to join us for the CSE's pre-deck, which we do every year in Vancouver and Toronto. Thank you for all your commentary on the mining space yesterday. I think it was a full room and went over well.
Yeah, it was a great event. There was a lot of people there, and we heard from some neat issuers as well.
The mining space is back.
It is, yeah. Sure.
Okay, so we're going to jump into the market recap for this week. We're going to talk about inflation because I feel like it's not 2023 unless we're talking about inflation, Bruce. We're going to talk about earnings that were released this week, how the market was affected by that. We're going to talk about some seasonality. And then, of course, we're going to get into some CSE issuer news. Okay, what happened with inflation?
Well, we saw inflation data both from Canada and the U.S. this week. The official CPI for Canada came out. It actually came out a little better than we expected. So it came out at 5.9% on an annualized basis, which is down a long ways. You know, it topped out in nines, right? So it's come down. So we continue to see that moderation going in the right way. The news out of the U.S. was not quite as strong. We had the PCE, which is the consumer expenditure number, and that actually was a little bit hotter than expected. And so the market has sold off today in anticipation of that. It's always trailing, but the market is worried about the fact that interest rates could potentially keep going higher.
And what do you mean it was hotter than we thought?
Yeah, so it came in at an annualized rate, which was quite a bit higher. And you can see here from the chart, what we're seeing is that if you go back in history, this is one of the hotter readings that we've seen, and that's really showing us that inflation's a bit stickier, and it's going to take a lot more work in the U.S. for them to be able to fight off.
Okay, so we heard this talked about a few times with some of the presenters yesterday, this idea that inflation is sticky. And I think people are starting to get more and more concerned of the fact that we keep increasing rates, both in Canada and the U.S., but it's just not pushing that inflation down very well, is it?
That's right. Well, I mean, if you look at the Canadian data, it's worked pretty well, it seems, because the Canadian data continues to move down. In the U.S., we'll probably see the data come down over the next 3 months just because of the lag effect from a year ago. But what we're going to really have to focus on is whether or not inflation's come down and is going to reaccelerate again because of some of those sticky items. And that's where, if you go back to 3 or 4 weeks ago, the anticipation was that the Federal Reserve was going to be maybe increasing interest rates once, maybe twice more at probably 25 basis points, and then they would be done. And now the concern is that they're going to keep going, and that rate could be as high as 5.5% sometime this year, and maybe even into the sixes. Okay,
so do you think that the market has become more impatient because we've been fairly aggressive with the rate increases, but it hasn't been that long that we've been trying to stave off inflation? Is that us being less, as a market, less patient, or is this concerning?
Well, I think it's a bit of both, right?
Okay.
So, we don't want that long-term inflation because that becomes very difficult to try to break the back of. It happened in the 80s, and that took multiple years for them to do it in with higher rates. And so they've been quite aggressive this time doing it. And, what we've seen as a result, we've seen, the market react. We've seen, US dollar has increased, rates have increased because of that. And, we are looking a little bit probably short-sighted because of the fact that, they really only started these rate increases a year ago, and it takes between 12 and 18 months to get the full effect. But that being said, inflation made such a spike up, and now trying to get control of it and bring it down is going to be the challenge.
Yeah, absolutely. Well, we'll probably be talking about inflation much more, but hopefully it starts trending in the right direction, or as it has been, keep going in that direction. Okay, so we got some earnings this week. What did we find out?
Well, we had big earnings out of the US this week, and what was kind of fascinating was the technology side of things. You saw a lot of companies that traded in the NASDAQ and the technology companies. As rates were going up last year, their stock prices were just coming down. And now what you've seen is that, some of them had good earnings, some of them had okay earnings, but a lot of their stock prices really made big moves up. And that's kind of interesting that, the market and the investor sentiment has changed a bit, so that even while rates were going up, some of these companies are now at an attractive level that people are buying into. And the one that really kind of caught my eye was NVIDIA, which is the big chip maker. And what we saw was that their numbers were okay, but they were talking about the fact that with now so much more AI being used, that they're going to develop a chip, and they're going to have a chip specifically for that. And the stock was up, I think it was around 20% after the following day after their earnings.
Do you think that's also potentially reflective of the sentiment of the investor, that they're willing to take on a bit more risk than they might have been a little while ago?
Well, we've talked about that in the past shows, and we certainly are seeing that for sure, where it appears the risk appetite's starting to change. I don't think it's back to where it was in kind of the end of 2020 yet, but what we're seeing is that we have seen some more risk come into the market, some more risk appetite come into the market. You're seeing more financings. You're seeing companies that were kind of left for dead now bouncing up as people are looking for bargains.
Yeah, absolutely. Well, that's interesting to note. And when's the next round of earnings that comes out?
Well, we're just finishing the earnings for the US. They're pretty much finalized now, and we're just getting into kind of the bulk of Canadian earnings. The last week there was quite a bit.
And these are earnings for 2022, right?
Yeah, this is for the fourth quarter of 2022.
Yeah. Okay, gotcha. Okay, well, we'll keep watching that. Let's talk about seasonality.
Yeah, so I mean, one of the interesting things is that the market has, if you look at long-term trends, the market does have very seasonal patterns where it goes ups and downs. And one of the things we know is that through January through kind of the middle of February is a very strong seasonal period. And then you have this kind of lull between kind of the end of or the middle of February down into March. And then there's a low created before, kind of the next move up that runs, almost into June. So it's, the market sold off because of, this inflation fear, but it also fits almost perfectly with what happens from a seasonality standpoint. And so, we're really going to be watching this closely to see if once we get through kind of the weaker seasonal period, if the market starts to respond a little differently as it had, kind of at the end of last year going into sort of the first 5 weeks of this year.
So what you're saying is the seasonality is doing what you expected it to do, which is a good thing for you to be able to forecast, right?
Yeah, so there's some people that manage money based on seasonality. So
Right.
they know, they've looked at the long-term trends, they know that the statistics are in their favor. There's going to be years where it kind of goes against them, but this year it's almost been to a T.
Oh, that's great. That's good. Well, that's pretty good news. Okay, we're going to get into some CSE issuer news, and I have some stuff I want to talk about based on our conversation yesterday during pre-doc. So the one thing I want to talk about, there was so much going on the CSE this week. I just wanted to mention some of our new issuers that listed. So I'm just going to read them out. We got High Rock Resources, Sorrento Resources, Hawthorne Resources, First Phosphate, Excite Resources, and Weekabog Lithium. In case you didn't notice, every single one of those is a mining company, and this is just in the past week, which is pretty exciting. First Phosphate, I think they're just in the first week of trading, and they've had a pretty good day out there on the market. So we're seeing some really great activity in the mining space, and we talked about this yesterday during pre-DAC. What is your thought on the mining space right now?
Well, as I spoke about yesterday, there's been a huge undercapitalization over the last, call it decade, really. We went from, I think the numbers were around 160 billion in capex down to probably around 90 billion is what I think is forecast for this year. And so as a result, there hasn't been too many mining projects on huge scale, and there also hasn't been a lot of exploration. Well, that seems to be changing now. It looks like there's more of a risk appetite. There looks like there's more of an appetite to be investing into some of these exploratory companies that are more on the junior basis. And so that could start this whole new trend. And if you look at sort of long term, they tend to be these 10-year cycles where money is invested, the cycle brings in more money, there's more development happen, and then it just gets sort of overblown and then goes down, we've hit that trough, it looks like, or we're close to it, and now we're starting the other upside.
That's pretty exciting. Obviously, the first quarter of any year is typically what we consider mining quarter because we have the Vancouver Resource Investment Conference in Vancouver. We have the Prospector Development Association of Canada Conference, which is in Toronto, and that's coming up. And then, of course, we have our own events, which we coin as PREDAX, which we do in Vancouver and Toronto. So it's been all things mining. I feel like in all of the rooms that we've been in, the energy is fantastic. People are raising money. Projects are happening. We're obviously at the CSE, we're seeing tons of new issuers come to market. There's a lot of interest around battery metals. Do you want to touch on that at all?
Yeah, we can touch on that a bit. There, like you say, there's been a huge interest in that. I mean, there's been some real performing battery metal stocks. There's been some big deals where strategics have made investments into that sector. And now, with the fact that, we're going from, call it 14 million electric vehicles probably this year to call it 45 million by the end of this decade to, I think the projection is around 80 million by 2040, there's a huge need for battery technology that's going to go into these vehicles to drive the power that they need. And right now there's a supply demand imbalance because we haven't been out there exploring for some of these battery metals, and they tend to be, in a lot of cases, neglected. And so now there's going to be a big push to get those to balance the supply and demand because the price has gone up. I think lithium's up over 100% in the last year.
Crazy. Okay, Bruce, what should we think about going into next week?
Well, I mean, the big thing is going to continue to be this focus on inflation and what we're starting to see from rates. So will rates continue to move up? If that's the case, it'll probably continue to put pressure on the markets. That being said, we've seen the markets now down 5 of the last 6 weeks. And so, I would expect that they are now starting to get to the point where, that rubber band's been stretched pretty far, so they could bounce back the other way.
Okay, well, we'll watch for that. Listen, I can't believe this is the first time we've gotten to do this
live,
together in person. I hope that you come to Vancouver more often. I'll come visit you in Kelowna more often, and we can do this sitting next to each other. It's been such a pleasure to have you here this week. Thank you so much, Bruce.
Yeah, thanks for having me.